investment. Um, and generally my first target will be the old high or slight higher highs just above it. So it'll be in Strat terms, some sort of broadening formation with a slight higher high. And then what I'll usually do is raise my stop to break even or a penny above break even, and then just let it go. So I'm scaling, I'm trailing. My stop is a penny above break even. It's really hard for me to lose money if I get one or two scales in, and I'll just let it go. So that's how I deal with a stock that's extended like this. Chart's getting a
Okay.
little messy.
I
Let me
like it.
clean
That's
it
a
up.
good strategy.
So there's another catalyst here with a split. We ran a little bit more, and then there's this this breakaway gap. And I don't know what happened here. It could be some news about Blackwell chips. It could be some TSM news. It could be a bunch of analysts upgraded at the same time. But this is sort of like it's a breakaway top is what I would call it. And you can try to short off of those really extended euphoric highs. That's usually not my game plan. I'm more biased long. So we come down off this euphoric high, and then there's like a three-wave correction up higher, or some people will see it as a W pattern.
Yeah.
And we're making a lower high here, right? And this will be some sort of triangle or pennant or bear flag. It's almost the inverse of the gold chart with it when it had the higher low. We had that pennant. It's almost the inverse of that on a 4-hour time frame. I kind of drew that line poorly, but it's more like that. And you're getting some rejection. Stock's trying to move higher. It's getting rejected as it tries to move higher. Breaks through that bear flag or triangle or whatever you want to call it. It's clouds turning red. Comes back, tests support, starts to break through, rallies back, tries to move higher, can't, tries to move lower, gets some buyers, tries to move higher, can't. It's a lot of this back and forth chop sometimes, which the 4-hour does a fair job of cleaning up, but it's not perfect. And then there's some news, maybe some production issue with Blackwell chips. It doesn't matter. We have a sharp move lower, and then move back up into support, which is now resistance. And then we come all the way back down exactly to where this kind of base, this chopping action was down here before earnings, all the way back down almost to the tick. And then start moving higher again. And again, we make a lower high, right? And this is one of my own indicators, but it's basically just looking at this cloud turning over from green to red, and it's I know it's hard to see here, but it's turning red. And what these red periods mean to me is basically I want to ease up off the gas pedal or avoid it, or maybe short some of these spikes higher. But definitely not pressing longs into these periods here. And there's another one. I did this chart a while ago, but I think we traded into 104 recently, 104.12, something like that. Once this starts rolling over and turns red, and there's some news about a DOJ investigation, and then Nvidia came out and said it was fake. It doesn't matter. The stock was still sort of, for whatever reason, getting sucked into a downtrend. In the news flow, it kind of comes and goes. But once you're in a downtrend, once the 4-hour rolls over, and you can use whatever metrics you like for that rollover, it could be time frame continuity or whatever. Once it's kind of entrenched in that downtrend, the news flow, even if you think it's positive, the market tends to interpret it negatively. And so that, I kind of am aware of the news as like a background level, but I'm making my decisions more off of the chart than than the news. I'm aware
Yeah.
that this earnings catalyst is coming up. I'm aware that this split catalyst is coming up. I'm aware vaguely of the news flow coming out during this period, but I can't tell you exactly what it was that caused this drop. I just know that once this goes red, it's really hard for news to, even good news, to have a lasting effect until whatever happens to make it start creeping back up again. Then when the news comes out, um, the market tends to react more positively to it.
Yeah.
So
The
that's
sellers got
that's
what they
kind of
wanted.
how I view 4 hour charts.
Yeah, I do. I actually went over on NVIDIA on my charts and the zoom my charts out the same way as yours, and yeah, it's easy to see. Um, yeah, this makes a lot of sense. I guess I'll have to start paying attention to the 4 hour.
Yeah, for some things, it's a really clean way of looking at it, and it's a little bit faster than the daily, but not super fast. 4 hour candle takes forever to form, so it's not super fast. That even if you're busy with other activities, or you work a regular 9 to 5, it's not so fast of a time frame that it's going to get away from you.
Okay. Yeah.
So I really like it. And it's not good for everything, but anything that has good volume and trades extended hours, or is some sort of like future derivative or something like that trades almost 24 hours, it works pretty well, and sometimes it works really, really, really well.
That's awesome. I like the 2 hours. I think the 2 hours is also
Yeah,
interesting.
that's another great time
Yeah.
frame.
Because you can, it's one of those like, especially if you got a day job, like you're not staring like, oh, there's another here, there's another one, it's another one, there's
Yeah,
another
yeah,
one.
yeah.
Yeah. So I get what you're saying about it can't get away from you. I liked it when Rob used to say, like, if you trade 60-minute bars, just to say just the 60-minute, a 2-1-2 reversal up takes 3 hours to set up. How do you miss that? You can't. You know what I mean? Like
Yeah.
it takes 3 hours to set up, and put a buy stop order in there and wait. you know, go back to
Yeah.
work.
All right, I'm
Very
gonna
good.
keep going.
Hmm.
So now we're drilling down a little bit more even, and we're getting into some shorter time frames. Um, so my version of the 60-minute is the 30-minute, for the reasons I explained. There's kind of a lot going on in this chart. I have two histograms at the bottom. Those that might be a little bit different. This is just some long-term moving averages, and it without having the EMAs on the chart kind of cluttering up the chart, it lets me know what the general trend is. And the general trend for Nvidia, at least at this time, was still up. It's starting to slow down, but it was still up. And this is right before earnings came out. They hadn't come out yet when I made this chart. And so, to me, what I see is the old Atari game Pong. I don't know if you're old enough to
Oh
remember
yeah,
that.
I know Pong.
All right. So to me, this is just traders and algos playing Pong with each other. It's so, in Strat terms, it's doing nothing.
Yeah,
Even
I'm
if
not
it's
trading
not,
that.
even if it's not like strictly inside of something, to me, it's doing nothing. And so while you can trade it, even on the 5 minute, you might just, if you're just looking at the 5 minute, you might not realize that you're playing Pong with algos and hedge funds and whatever. So you can trade it. You just have to realize that's the game. That's the game that you're playing, and you're probably not going to get out of this range either way until the catalyst hits. Um, so so typically, I won't take this trade. I won't take it before earnings come out, because I wanna break out of this range, and I know the range is going to be kind of limited. And I'm looking for stuff that's moving. So personally, I don't take this kind of stuff, but it used to be years ago, people would trade nothing but Apple. And
Mm,
then the stock became Tesla. And then for years, people would trade nothing but Tesla and do really
yep.
well. I remember there was a trader and he would buy calls every Friday night on Tesla because every Monday it would be up like another $5 or $10. And
Yeah. Mhm.
he made a killing doing that. And that's, to me, that's not, it's not really using the chart, it's using your head. But he made an absolute fortune doing that. And there was no rhyme or reason other than every Monday the stock went up. And so you can you can you can trade this stuff, but for me, I'm looking for things that are moving out of a range or trending higher. Um, and if I was going to trade it, I would be looking for scaling out relatively quickly. I probably wouldn't even be in it down here. I would be trading the band and not looking for much else.
Mm-hmm. Mm-hmm. Makes sense. Makes sense. Yeah. And yeah, 20, yeah, was it 2019, 2020? Definitely 2021. Yeah, yeah. All you had to do was buy Tesla and it would go straight to the highs. And I remember a lot of people getting burned because they were shorting Tesla when they're like, you can't go any higher. There's no way it can go any higher. And they would start shorting Tesla and get wrecked.
Yeah.
So, and then
And that
Tesla's
that
not
might have
doing
been
that
why it
anymore.
just kept getting higher, is
Yeah.
because people kept trying to short it and getting squeezed every Monday. So,
Yeah. Yeah.
ugh,
Yeah, and
anyway, the
now
good old
now
days.
Tesla's on this like, well, it's hammer and force on the month now, just based on where it's at right now, the time of this recording. But yeah, but Tesla's been on this downtrend for a while now. Like when is it going to start going back up? And when is it going to stay up there? It's not doing what it was before, is what I'm trying to say, where you can just
Yeah,
buy
I'm
and
I'm with you. I don't have the answer, but
yeah,
I'm pretty sure that we'll see it in the charts when it turns. And
yep,
my guess is that it won't have anything to do with the cars. But if some of their, I don't know what you want to call it, but side projects
hmm,
end up working out, they could be really, really huge and go on another run, just like they did with the cars.
yeah,
So, like with Nvidia, there was a big push with gaming chips a long, long time ago, and then it was mining chips, and so these things kind of, they don't repeat exactly. It's usually not the same exact catalyst, but it's some new innovation that the companies come up with that propels it higher into the stratosphere again. Because I mean, everybody knows that they have cars. Okay, that's great, but what's next?
yeah.
And yeah. Anyway, enough
No,
about
that's good. That's
Tesla.
a good point. That's a real good point. Yep, real good point.
All
Oh,
right,
that's a nice fish right there. What is that?
that is called an Atlantic bonito. So that's in the ocean. I caught that fairly recently,
I used to have a
and
buddy named Benito in high school. I'm kidding. That's awesome.
they're
That's a nice fish.
they're a lot of fun to chase. And every once in a while, I get lucky and catch one.
That's a nice fish. Heck yeah. What are we doing? Trading routine.
Yeah. So trading routine. Uh, so for me, I like to get outside early, and I know you preach this too about getting outside and taking a break from the screens. But for me, I really need to do this. And sometimes, if the weather's nice, I'll go out fishing. Maybe I'll go for a walk, or maybe I'll go into my vegetable garden, or it's something like that. But it helps clear your mind for the day, which I feel like is kind of overlooked. But also,
Well, you're doing
if you
this at the
just,
beginning of the day.
I do this in the beginning of the
Oh,
day,
okay, 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 okay.
and but also if left to my own devices, I might just go down some rabbit hole with stocks or some new strategy or some new indicator, and if I end up sitting in front of the computer day after day after day, you end up with like carpal tunnel syndrome and wrist injuries and elbow when your shoulder hurts, and start putting on a few pounds. And um, yeah, so for me, I really like to get outside early, clear my mind, do something that's fairly active. I'm not running a marathon at whatever 6 a.m., but I just like to get out and move and get away from the computer and make sure my eyes are looking at something that's not, 2 feet in front of my face, and just get set up for the day.
I like it. I like that a lot.
So, and then once I come back home, I'm I'm looking at some resources. I look at bar chart pre-market. They have and there's a lot of companies that provide this, but pre-market movers. Basically, I want to see everything that's moving in percentage terms, more than 5, 10%. And some days it can be kind of a slow day and you don't get a lot of movers, but most days there's some stocks, and they might be up 20, 30, 50% or more in the morning pre-market. I'm also looking at Finviz new highs. And so I'm looking for stocks that have blue skies above them. They're making new highs. There should be no resistance up there. And I'm not just looking for stocks. I'm looking at sectors, and it could be maybe AI names are all hot. They're all moving to new highs at once, or maybe it's financials, or maybe it's insurers, or maybe it's the weight loss names, or whatever it is. I'm looking for themes, and the more the more evidence I have, or the more stocks they're lining up in one direction, the better I feel like my odds are of playing in that space. And and it varies. You go through different cycles. Sometimes maybe there's an oil spike, and energy names will be hot for red hot for a month or two, and then they kind of slowly fade away. Or maybe AI stocks were really hot for a while, and then all of a sudden they start to fade away, but AI utility plays start to really ramp up, and they're hot for a month or two. So I'm just trying to stay with the rhythm of the market. And I find that looking at new high lists helps me stay with the rhythm. And, I'm trading every day. So I feel like I'm fairly in tune with the market, but these tools help me stay there and um, stay with the market's pace.
I like it in the rotation and all that stuff. Good. Yeah.
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 Another tool I use is called Zendu. And so this is a YouTube streamer. Um, and I don't know if it's Trade Ideas or some other kind of stock streamer, but basically, um, it it calls there's a robotic AI woman's voice that calls out tickers. They have I forget what the other version's called, but I like the silent version, and it's not really silent. It talks to you the whole day. But the other version has like ocean waves and kind of background music. Um, so I just use the
Zindu.
silent.
I have to look at that. Hmm.
Yeah, it's great. So and it says that there's no delay, and it's real time on my system, and it's probably my system. It's or where I am in the country. I don't know. It's about 30 seconds, maybe sometimes 60 seconds delayed. But I'm only looking at 5 minute, 10 minute, 30 minute charts. I'm not trading 1 minute charts. Um, so 30 seconds delay is still fine for me.
Okay.
And this will give you pretty much anything that's moving, even some little $1 stock. It'll If it's moving with volume, this thing will call it out.
Zindu. All right. I'm interested in that. Definitely.
Yeah, so I have this thing going pretty much all day while I'm trading, and it just talks to me, and I'll look up the tickers and see if they meet my criteria, and see if there's an entry for me, and check out the volume and all that sort of stuff. And during the day, I'll have two main lists. These could have a lot of tickers in them, but generally, I'm only looking at the top 10 or 20. So there could be a really long list, but I'm only basically looking at the visible range of the list, and that's probably top 10, top 20 names. And then once you get beyond that, the stocks that are moving, 1%, 2%, they're just not very interesting to me because they're not moving. So I tend to leave them alone, at least for day trades and sometimes swing trades too. I just I just like stuff that's moving.
Yes, stuff that's moving. Yes.
Yeah. Um, and then lunch is more exercise. Just step away from the computer. Usually I'm doing like sit-ups or push-ups, something like that, body weight exercises. I was lifting weights for a while, but I hurt my elbow, and so I got away from that. I'm just doing body weight exercises, but something just so you're you're moving and not just tied down to the computer all day.
Very
Uh,
good.
I think that's important.
Yeah, no, no, that's very important. Yeah, there's a that definitely could help a lot of people with just the trading psychology too, because some days there's not a lot going on, and you think you might get into that, well, get stuck in the vortex of I got to find a trade, I got to find a trade, but hey, it's lunchtime. Let me go, I'm gonna go, run a couple miles, come back. It's like I can run 2 miles in 20 minutes. I'll be back in 20 minutes. And get something to eat, and then I can, you come back with a fresh mind. That's a good idea.
Yeah, and I'm most active in the morning, but sometimes you'll see a stock that kind of does this until sometimes it's 12:30, 1 o'clock, and then it'll
Yep.
break out again.
Yep.
So I'm most active in this period, but every once in a while I'll get like a second leg. I
I've
call it a
noticed
round
that.
two.
I've noticed that Rob used to do the Strat time report at 12 o'clock, and I always, but it always what's happening during the day, and what's happening at lunch. But I've noticed since I got on that routine of him doing that on at lunch, at 12:30 you'll see stuff either continue the trend up, or they say okay we had enough, and then they sell it the rest of the day. At
Yeah,
12:30 seems to be like that seems to be the time. If you didn't do nothing in the morning, 12:30 is the time to look for that reversal continuation up, or are we done for the day and then start going to the lows. That's
yeah,
12.
exactly.
Yeah. Hmm.
And it's the same ABC thing that I mentioned with the gold monthly chart, just on a smaller time frame. And you see this pattern again and again and again.
Hmm. ABCs, the ABCs, my Jackson 5 ABCs.
Yeah.
Yeah.
All right. So so just a little bit more detail on the pre-market list. I'm mostly looking for gainers because I'm looking for longs. I want to find stuff going up. And I'll go through each one of these tickers and I'll look at it on higher time frame. Usually I don't look at the weekly, but I'll look at the daily, maybe the 4 hour, the 30 minute, and see if it's going up. That's basically all I'm looking for, is to see if it's going up. And if they don't meet my criteria, they get axed. And I'll just go through the list. I remember I did trade a firm, and I'll just go through the list, and if they don't meet my criteria or I can't find an entry, maybe I'll set an alert, or maybe I'll wait and check on them a little bit later. Most of these movers, they have some sort of catalyst, either it's news or earnings. And I'm aware of the earnings at kind of a superficial level, but I'm more concerned with the market's reaction to the earnings than the actual earnings themselves.
Hmm. Hmm.
So
Yep.
I hope that made
Nvidia.
sense.
Nvidia, for example, double beat, great estimate, great guidance. They made the money they needed to make, great guidance, and it still went to the lows. You know what I mean? It's
Yeah, exactly. And so that's something that I would skip. All right. So just a little more detail on the Finviz screen. They have this preset. They have a bunch of different signals. You could just pick new high, super easy. And I'm looking for good volume, so it's not a thin name. I can trade it easily. I can get in and out easily. The relative volume just means there's more volume today than usual. And so it's one, two, three, four parameters. It's really three parameters, with the country being the US. And you see names that are making new highs with volume. And there's a real mix of stuff here. Uh, but there's some software names, um, some healthcare names. Sometimes there's uh, more of a clear trend where you see, like, most of the names will be insurance names. It's not like this on this page, but I'm that's the kind of thing that I'm looking for, is themes here, uh, but also individual names that for whatever reason, uh, the market the market's getting behind, and they're pushing out to new highs, and there's just blue skies above.
Hmm. Are you looking for simultaneous breaks, meaning all, let's just say all energy or all technology, or for some reason all insurance names? Are you looking for things like that?
Yeah, so with like Berkshire Hathaway, I would look for Chubb and Allstate and Progressive, and all the insurers all making new highs, and that would be make me more confident in buying one of them, or I could even buy all of them, depending on uh how the charts were setting up, etc.
Yeah,
But yeah, the more data points I can line up that give me confidence in a trade, the better. And that could be uh, something like new highs. It could be seasonality. It could be a monthly chart. It could be whatever. But the more data points I have lining up in a certain direction gives me more confidence. I tend to bet more, um, and I just feel, and based on data, not my gut feeling, I just feel more confident in the trade.
good. Yeah, okay, good. Yeah, yeah, that makes sense. I talk about that too. That's what we call it, trading simultaneous breaks. Like instead of just getting, you know, this company and that company, and it's like individual names. Like, okay, is this okay? There's a lot of volume in this one. Everybody's in GE. Okay, what sector is GE in? And then are there other ones doing the exact same thing? Okay, we can get those two. That way you can work five winning positions as opposed to just one, you know?
Yeah, exactly.
Yeah.
Yeah. GE, Honeywell, 3M, if they're all running,
Mm-hmm.
you can take one of them, you can get the ETF, you can buy all of them and the ETF. Yeah, you can. Yeah, I like that. I like that a lot. When themes are running, I try to press as much as I can.
Awesome. Very good. Next slide.
All right. So so I feel like this is more applicable for traders than investors, but this has been really helpful for me. And this happens to be a Google sheet, or you could use Microsoft Excel, but some sort of spreadsheet, and it's just simple math. Um, but it really highlights areas of weakness that maybe you could address by writing down a goal. So I'm not going to go through all the math, but I want to first focus just on this little quadrant up here. And these are real trades that I made. I made up this number to be somewhat artificial, but these are real trades that I took in the first couple days of the year. Nothing spectacular. It was still pretty low volume. I was just getting into the groove of the year, and but whatever. These are the real trades I took, and so I had 6 wins, 1 loss, and just it's just important to fill out a few of these fields here. So 86% win rate, and the win rate really isn't that important. What you really want to maximize is this average win loss. So my average win was, say, $200, and the average loss was 100. It was this one right here, and so that's an average win loss of 2 to 1. It would be even better if that was 3 to 1 or 4 to 1. And this win percent, that could be even as lower than 50%, as long as the average win is much higher than the average loss. You'll still be very profitable. So this
That's
this number here is probably one of the most important factors in profitability.
I'm
And
gonna
this other,
I'm sorry. I'm going to start using that expectancy. I want you to get to expectancy. I just want to. I just want to jump in and say I talk about that all the time. Like you can't make $100 and then lose $200. You can't make $300 and then lose $600. You're never going to get there. You're never going to get there. So if you made $100, you need to make sure that you at least if you have a loser, it's at least $50. You know what I mean? You don't want to say, okay, my stop loss is $50. I'm just saying through your trades for the week, you don't want to cut into the profits that you made. You know what I mean? So maybe you're okay. I got a $25 stop. I had a $25 loss on this one thing. All right, cool. I'm still green for the week. But that I like that. The average win loss. I'm gonna start talking about that a lot more. I like that a lot. I'll start paying attention to that more. That's what I'm saying.
all right, sounds good. The expectancy is actually a mathematical term,
Oh,
and
okay.
I'm not gonna. I don't want to go into formulas for the purposes of this. I think a lot of people just tune it out, but um, you can Google it. You can Google expectancy and figure out the formula, and you can calculate it with these parameters here. But basically, uh, in in uh, in terms that make sense to me, is that every time with this expectancy, I click the buy button, I'm expecting to make $220 and some change. So every time I click the buy button, for this example with these trades, I'm expecting to make on average $220. Now, if you go through this spreadsheet and make your own spreadsheet and you calculate expectancy and your expectancy is negative, whatever, any negative number, that means you need to stop trading because every every time you click the buy button, you're expecting to lose money.
Mm,
And
mhm.
um and so there's some problem somewhere. And I don't mean stop trading forever. I just mean there's some problem um that that is leading to a negative expectancy, and you need to address that. If you keep pressing the buy button, you're going to lose on average that amount of money every time you click the button. So the only logical thing is to stop clicking the buy button and figure out where you're making a mistake. Write down some goals, go through your trading logs, find out what mistake you're making, and try to implement some fixes to get this number as green as possible. And so that's probably the most important aspect of this little spreadsheet here. But I also have it calculate how many shares I can buy. Um, this time frame is telling me this probably should say 30 minutes, but it's telling me based on this ADR percent, which I pull from TradingView, what time frame is best suited for trading that particular stock. And it might be a 60-minute time frame. This Sidu, I don't even remember what that was, but it has a higher ADR, and so this spreadsheet's telling me I should probably look at it on a 5-minute time frame. And then there's some more math. These are the actual shares that I bought. And then this is the actual exit, the average exit. I don't make a lot of notes for my winning trades. It's kind of basic, but I want to be a little bit more detailed when I lose. It's sort of
Mhm.
counterintuitive. Um, but on this chart, I know that I didn't look at the daily time frame like I should have. I just took the trade. This was a mistake. I took the trade because it was moving and it looked like it was doing well in the 30-minute. Um, and I didn't look at a higher enough time frame. And so I wrote in here, okay, but check the daily first. And I would have avoided this stop if I had done that. So that's the kind of stuff that's the kind of information I'm getting out of this spreadsheet. It tells me, you know, here it said I could, based on this math, the portfolio risk, the max risk that I've set, I can lose up to $300 per trade, and it's telling me $300 of risk, I can buy 100 shares of Celsius. Well, something was going right because I bought 180 shares, and that's more than what the spreadsheet told me I should. Um, and and so it's like a guideline for me. So I'm aware of this number, but I don't hold to it exactly.
Mm-hmm.
Um,
Mm-hmm.
and and if the chart is looking good, I might upsize a trade, or maybe there's something that's that's not looking as attractive to me. I don't think I'm going to do as well for whatever reason. Maybe the volume isn't where I'd like it, or maybe I don't see the kind of urgency that I want to see. Excuse me. I might just buy 2 shares of something. So these were kind of higher priced stocks, but um, you know, this spreadsheet's telling me a lot of information for the amount of information that I have to input it. And another thing is that Google Sheets and Google Finance will pull all this data, this not this data, the price
Oh,
and the
okay.
trade time. Um, it'll pull it'll if you just enter the ticker, it'll pull. You can have it pull all kinds of financial data in Google Finance.
Wow. I'll
But
have to check. That's
mostly I
cool.
use it's not real time. It could be delayed like 10-20 minutes, and maybe like 1 in 1,000 or maybe 1 in 100 tickers, they won't come up. But for 99% of stocks, all the major stocks that you would trade, even this Sidu, and I forget what that was, it will still populate with with current prices, or
That's
almost
cool.
current.
I didn't know that was available. I didn't know that was a thing. All right.
Yeah,
I gotta
Google
try it.
Finance. I mean, you can look online at Google Finance, and there's all kinds of stock related information that you can pull directly from the web for free. And you can also do it in Microsoft Excel, but I don't use that. But they're
Very
they're
cool.
very similar. Google Sheets is basically a free version of Microsoft Excel. It's like Microsoft Excel Lite.
Yeah. I like this a lot. It's a good idea. This is a very good idea. And I like the trade notes at the end and this expectancy in that upper quadrant. That's cool too. Very, very cool. Good way to
Thank
track
you.
it and very detailed, but at the same time it's easy enough to read where you're not overwhelmed with just data on top of data.
Yeah, and I also have these kind of notes for myself. Um, enter stop loss on entry. I have a bunch of notes. These are mostly for myself. When in
I
doubt,
like
refer to higher time frames.
I like that you're buying shares. I like that you're trading shares.
Yeah, that's mostly what I do. I'm mostly a common stock trader. I also trade ETFs and in the triple leveraged ETFs or the double leveraged ETFs, but mostly just stocks, and I feel comfortable there.
Good. I like it. I like that a lot. There's a lot of pressure out there, especially on new traders, to get people into trading options and all that stuff. And that's nothing wrong with that. But I mean, I think you need to learn if you can trade it with common stock, then you know what you're doing. Then you can do other things. But that's why I think common stock is like first base. You got, you know what I mean, or the first station. You got to be good at that one first before you can start moving on to all these other instruments and things like that.
Oh yeah, I totally agree. For options, you have to understand Greeks, especially decay, and yeah, it's brutal. If you're even if you end up with a winning position on paper, if the stock goes sideways for long enough, you might end up with a loss. And yeah, so I would definitely say if you want to learn trading, definitely start with stocks, and uh, once you master that, then maybe move on to some other things.
Yep,
Stocks
very good.
are fairly forgiving compared to options.
Yes, yes, very good. Heck yeah, heck
All
yeah.
right, I'm gonna keep going.
All right.
All right, so I'm gonna talk a little bit about stocks I wouldn't buy, and that seems a little counterintuitive. But if you reverse some of this stuff, you'll see what I want to actually buy, and I'll get to those later. But I feel like a lot of traders get tripped up with this part of it, and they end up with more losses or stop losses than they really ought to. And the key is just is avoiding those losing trades. And that, it's easy to say, it's harder to do, and you're always going to have some losers, no matter how much you prepare, how much you study. Uh, but if you can avoid some of the obvious losers, that's a huge, huge help for this term called expectancy. Um, so let's get into it. So this was another semi name called Ambarella, ticker's AMBA. And this is a 5-minute view. There was an earnings catalyst. There's a big move higher, but it happened on pretty light volume. I mean, lighter than even the volume that went out at the close before the earnings came out. And so unless you got in on this 5-minute candle, unless you had really fast fingers, and I'll just share with you that I'm not that quick of a trader. There's some traders that are really fast, and that's just not me. So great earnings, beat and raise, like you mentioned with NVIDIA. And the aftermarket action was fairly positive, but it doesn't have a lot of volume. But we're making higher highs, we're making a higher low, we make a slight higher high, but then this low, it comes down almost to equal lows. That's a little bit lower than I would like. I'd like it to stay in this range. So it's a clear higher low. And you see this a lot. You see this really low volume push right around 9 o'clock. And I don't know for sure that this is the case, but I feel like sometimes it's traders, these big traders, that are looking to offload positions, and they need that excitement, that volume to be there, that liquidity to be there to sell into. So we try to push a little bit higher at that 9 o'clock time frame, light volume, and we're hit with resistance right away. As soon as the bell dings on the open, there's people in there selling, and they're selling with volume. We're breaking this EMA cloud, we're breaking VWAP, and we're selling down hard. And now this is a lower high. So even if I was somewhat interested in this name, I wait for the first 5-minute candle to close because I want to see where the buyers and sellers are lining up. And I'm looking for aggressive buying, aggressive price action, and this is the opposite. So even though great earnings, great quarter, they had, I don't know, I didn't listen to the conference call, but maybe a great conference call. What happens at the open tells me really all I need to know. And that's that sellers are in control. And so I don't want to buy into this. And even you see some buyers start to show up a little bit later on. They push into VWAP, they push into this cloud. They can't make any progress and they're rejected again. It's kind of this 5-wave down. So this would be something that I would avoid. And really the key here, other than the chart reading, is waiting that first 5 minutes and not just jumping in and buying.
Well,
And
that's
so,
very important. Yeah, that's good. We always say when I was with Rob, it was like 15 minutes, and then I think we raised it up to like 30 minutes, just waiting. You know what I mean? That could wait for the smoke to clear. But 5 minutes, yeah, I like wait for first 5 minutes, especially for those fast people.
yeah, if you're trading off a 30-minute or you just want to give it extra time, that first 30-minute candle would be 6 of the 5, and so you're down in that range, and it's just a big red ugly nasty candle.
Yeah.
And but the conclusion's the same. So for me,
Mhm.
it's not a long setup. You can set an alert, which I did here. That's what this dashed line is here, and that would be higher highs, higher than the pre-market high. And if it was down here and made whatever that is, a 9-point move, there's probably not going to be much left for me. So I might not take it even if it did make a new high there. Or you can delete the ticker. Um, and
Just take it off
sometimes I'll
your
do
watch
that.
list. Hmm.
Yeah, I'll just take it off my watch list. And then I'm not tempted to look at it or reevaluate it until the alert fires off or expires. And it's just taking up space.
I like it.
All right, another example, and this is, remember that Sidu ticker that I talked about. This
Yeah.
was something like what Sidu was doing, but I'm going to look at this every chart on a daily time frame, and you could pick some other higher time frame that's clear for you. But basically, we've got a downtrend. Um, it's up. I know it doesn't look like it on this time scale, but it's actually up 50% because the stock has been beaten down so low. And you'll see rapid Twitter posts about this name moving. But when I look at it on the daily, um, and everything just looks horrible to me. And and um and these names uh, that have this history of reverse splits and this history of pops and fades, they'll do this stuff again and again. There'll be some news or some, it doesn't even have to be real news. It could be some fake report about them being acquired or something. It doesn't even matter, but they'll get the stock going with some volume and price action. And then at some point intraday, they'll smash it right back down. And this happens again and again and again. And some names just trade like this. And so for me, there's no long setup here. I could set an alert, but I have to set the alert, someplace like above 20 for me to get interested in it. And and by then there probably wouldn't be much left for me. So for me, what I did is I deleted this ticker. I don't even want to look at it. I don't want it on my watch list. I don't even I don't even want to think about it. I don't want it to take up space for another name that I might want to actually trade. I hope
Yeah.
that made sense.
Yeah, it makes perfect sense. And we see this a lot, where they, these weird, yeah, like you said, these weird spikes. And then yes, you'll see lots of, go look at, there's this one stock. It's, let's just say XYZ because that's always the generic name. But XYZ is it's going to the moon. It's doing this, and they got new factories, and here's a video of all the stuff that they're making. Lucid was one of those stocks that had all these videos and stocks and news and all this, articles and everything like that. And I'd show people, okay, what do? We look at the monthly chart. What's it doing on the monthly chart? It's red. What's it doing on the week? It's red. What's it doing on the day? It's red. Where's the buy signal here? Where's the actionable signals? There's no hammers. There's no inside bars. What are we looking at? And I try to be really, if we're live on the weekend shift, I try to be a little I try to make it funny. I'm not trying to make fun of their stock pick, but I mean I just try to show them just with time frame continuity, where are the buyers in this thing? There ain't
Yeah.
none. It's just hype. Yeah.
Yeah,
Yeah.
so however you get to that point, whatever higher time frame or multiple higher time frames you use to define a trend, whatever system you use, that's you have to have some kind of system, I think, of eliminating names that are just trade like dog mess, and
Yeah, yeah.
just get
Yes.
them, just get rid of them.
Yep. Yep.
All right, the last one, I feel like I feel like this is another common problem, and it might be a name that people are familiar with, and they're tempted to buy it on a dip. And so this happens to be Dollar General. There was an earnings event, and the market didn't receive it favorably. Um,
39 points to the lows. Yeah.
yeah, it's brutal. But if you look at the higher time frame, it also looks awful. So it's not just on the 5 minute that looks awful. It looks awful on higher time frames too. But it's less than this pre-market high. It's less than the moving averages. It's less than VWAP. Some of these histograms I have down here, they're red. So for me, there's no long setup. I could set an alert, but it would be too far to be useful. And and so for me, I'm just going to delete this ticker. It's there's nothing here on the long side for me.
Hmm.
And I think sometimes people can get fooled. They see this this green bar at the open, and they want to maybe maybe jump in and try to get a counter trend rally. And a lot of times those rallies get stuffed, just like happened here. Um, and so for me, this would be just a no touch. I I, I don't want to short it. I don't want to be long. I just want to be away from it.
Jeez. He said, I don't even want to look at this thing. This thing is gross.
Yeah, exactly. All
Ah.
right. So now we'll get into some long trades. This happens to be Build a Bear, and I really don't pay much attention to Build a Bear. It's not a name I usually trade, but they had earnings, and I think it showed up. Maybe it showed up on the bar chart, pre-market movers, or maybe I got it off of Zendu. It's pretty thin in the morning, but there are some trades going through here. It's just thin. Um, and then once it opened, uh, we've got some big green volume bars. It's above the pre-market high. There's a good reaction to the earnings. There's good volume. It's above the moving averages. It's above the VWAP. These two histograms down here are bright green for the most part. And so this is a name that I'm going to look to trade if I can find an entry. And a lot of my entries on the 5 minute, they're not strat entries. There's nothing wrong with the strat entries, and you could definitely do it. Um, but a lot of my entries are bar entries, and this stands. There's different names for this, but break and reverse, and you can break a VWAP, or you can break an EMA, or you could break some sort of candle. Um, but anyway, break and reverse is a common entry for me. Sometimes if I'm quick enough, I'll get in on that first bar. A lot of times I don't see the stock until it's already started moving quite a bit, and then I'm going to wait for some kind of consolidation, just like with the gold chart on the daily. You move up really fast, and then there's some sort of consolidation, and then you move up again. So in this example, this is a trade that I took. Um, I got long right in here, this 32, 33-ish average. And I ended up getting one scale in. I took off a third of the position. And then what I did is I raised my stop to 1 penny above my average entry. Uh, no particular reason except, I mean, on the chart, but I don't want my expectancy to go red.
Mhm.
Uh, so as long as I get a scale or two in and I raise my stop above the entry, it's almost impossible for me to lose money. I mean, if I
Mhm.
try really hard, I can lose money, or
Mhm.
something, crazy happens, I can lose money, or I make a bunch of mistakes in a row, I can lose money. But it's really hard once you lock in um, some gains.
Mhm.
It's really hard to lose money, and that even though this is not going to help my expectancy because it ended up being kind of a small trade, it's not going to be a red trade and it's not going to hurt the expectancy. So just to finish out the thought here, we ran into some resistance up here, tried to push higher, couldn't. So here's our lower high, right? This is kind of a common theme. We're
Mhm.
setting up a bear flag or a pennant or a triangle or whatever you want to call it. And then that triangle is going to expand, started breaking lower, and I could have sold pretty much anywhere in here. Um, but I didn't. And just be honest, I didn't. I didn't keep a close enough eye on it. Once I set my stop, I knew that that I wasn't going to lose any money on it. I'd already scaled, and I was looking at other names. Just to be honest, I
Mhm.
probably should have got out a little bit earlier, but I didn't. And then it's a little bit thinner a name, and I didn't get filled until 32.30 average. And that's just a little bit of slippage, just a few pennies. It's not a big deal. It's still going to be a profitable trade because I got that scale in, but
Hmm.
that's the kind of thing that I'm looking for. And this would be called like I would call it a base hit, like a single. This isn't a
Hmm.
home run. I locked some gains. I raised stop to break even. I should have adapted to some new info on the chart. I didn't do a great job of that. And I got stopped out on the remaining 2/3. But this is the kind of thing that I'm looking for every day. And some of these are going to be home runs. Not all of them. I end up with more singles and doubles than I do home runs, but some of them are going to be home runs.
That's awesome. I like and the one I was going to ask you about. I think you think you already answered it, but the 1 penny above your entry, that's just so it is a positive trade no matter what, correct?
Yeah.
As
Yeah.
opposed to break even.
There's no real chart reason for that or logical reason. It's
Mhm.
it's just a math thing based on expectancy. I'm I'm trying, especially for day trades, I'm trying to maximize the expectancy is really what it comes down to. I'm trying to maximize that win-loss ratio. And if I get stopped out, it's no big deal because I know tomorrow there's going to be two or three other names
Hmm. And it's
pretty
still a
much
win,
every
even though
day.
it's pennies.
Yeah.
It was pennies, but it was still a win. You can go back out on your kayak and be happy. Like, I made
Yeah. Well,
35 cents today, and
it's
everybody else is getting wrecked.
this was almost $2.
Uh-huh.
This was almost a $2 gain. So it's not nothing, but overall the
No.
trade was I would call a single,
Oh
and
yeah. Hmm. And it
so
keeps you. I'm sorry, but I'm sure it keeps your psychology too. You're not. If you do get stopped out and it's a small win, it's still a win, as opposed to a lot of traders that I work with. They get frustrated because they get stopped out and it's a break even trade. But
yeah,
they didn't lose, but at the same time they didn't gain anything either. So.
yes,
Mhm.
yeah, and that I mean psychologically it helps. But if you have enough break even trades, that will also hurt your expectancy because your every time you click the button, if if you make $0, that's not a lot of encouragement to keep clicking the button. So um, I try to. It's hard. It's hard to do this, but I try to think in terms of expectancy,
Hmm.
and um, and it doesn't always follow with psychology. It's a little bit counterintuitive in some ways. Um, but yes, definitely red is worse than breaking even.
Okay. Yeah. Yes. 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 All right. I like it. Thank you. Thank you. Mhm.
You're very welcome. All right, next slide. This is a little better trade, still not a home run, but this was a firm. So this I got from the bar chart pre-market scan, and it was moving on earnings. I actually got some back here that's off the chart, but so there's an EPS catalyst. There's a good reaction to EPS. It's greater than the pre-market highs. So this is the pre-market high. It's got a good volume. As soon as it opens, you can see the buyers coming in, and maybe they're not natural buyers. Maybe they're shorts getting squeezed. For my purposes, it doesn't matter. It's whoever is amalgamating to create that big green volume bar. It's above the moving averages, above the VWAP. My histograms are bright green, especially the short-term one when it turns a little bit later on in the morning. But it's the same. It's actually the same entry. It's break and reverse again, bar pattern. Uh, People go by different names, but there's a little bit of chop at the beginning, um, and then the sellers try to push it lower, and they couldn't, and it hammers back up off that low. And in strat terms, you might enter as that as that high gets taken out.
Yep.
So that's pretty much where my entry was, right there. And or my ad, sorry. I added 39.31. I scaled a little bit later on, and this didn't roll over. I ran into some resistance here, but the sellers never really came out and tried to push this lower. So I held, and I sold some more the next day. Would be somewhere up here, 44.54. And then I had some more shares from the 30s that I held on to as a runner, and I think it's right around 40 now. And I'm still in that trade, uh,
Very
however
cool.
many days later this is. And I might get stopped out on the rest, or maybe it'll keep running. I don't have a lot of high hopes because of the seasonality chart that I showed way back at the beginning. Uh, but but basically, it's the same general procedure. I'm locking in gains. I'm raising the stop. Um, I'm adapting to new information. And again, this wasn't a home run trade, but it was a little better. And they'll just this is I mean, these are two real trades that I took whenever I was putting together these slides, and you'll get it's not exactly random. There's more base hits than home runs, but you'll get a smattering of different performers on different days, and some of them will look really really good and not go anywhere, and some of them will, they'll just give you like a single or a double, and it's okay. Those singles and doubles add up over time.
Heck yeah. Very good. Very good. Yes. This is a firm. I'll have to look at this one. Definitely. Great,
Yeah, the
great
other
expert.
thing, with a firm, it tends to trade with Upstart. They have
Okay.
slightly different business models, but I knew that Upstart was doing well, and they had a good reaction to earnings too, and so that gave me more confidence that that instead of just rolling over and going back down here, that uh, that I should be sitting there waiting for some kind of reversal, some kind of break and reverse, and reclaim and reaccelerate. So that name told me that I should be paying attention and waiting for some kind of setup.
Very good. Yeah.
And I think that's my last slide. Yeah, I'm at the end here.
That was
Uh,
this is a really good interview. Very good. Uh this is if you would I'm telling you, lots of notes here, lots of notes because you these charts, number one, you took the time to detail all that stuff out, and I appreciate it. Because it's
you're very
easy.
welcome. Thank you.
Yeah, very easy to see, how these how you do it and putting it all together, and then just how you're staying in these trades. And then when you're getting out, that's awesome when you're getting out. And I'm gonna look at those the Google Finance Google Sheets thing. I do have Excel, but I mean I want to see that data get pulled into there automatically. And then just set up something similar like that. Like that, I think that'll be very helpful for a lot of the traders out here, something that they can watch without having to. There are trading services that want you to import all your data, and they'll do all that stuff for you. But I think putting that information in there for yourself, and watching your high, your wins and losses, and that average you're talking about. I think that'd be a really good tool for a lot of the traders out here. Really good tool.
Yeah, yeah, I definitely recommend diving into Google Finance. There's all kinds of finance functions you can pull. It's all free. Uh, just the prices are delayed 10, 20 minutes, so you just have to remember that they're not current prices. But the way I use it as a trading log, you can make your own. You can design it however you want. The sky's the limit, and make it your own. That's what I'd say. It's really helpful if you put in the time. It's really helpful.
Very good. Yeah, yeah. I like it. I like the free stuff too. The free data.
Yeah, it's all free. I mean, that's a big.
It
Big
is.
selling point for me. I'm kind of frugal that way.
Yeah, yeah. Like I said, there's always another service that they want you to subscribe to, and another thing, and another thing. So
Yeah.
I think that's going to be helpful for a lot of the people out there. So thank you so much. Um, if yeah, that's the last slide. Is there anything? Where can we find you on Twitter? Or no one calls it X. I'm not gonna, but it's X. But no one calls it X. It's Twitter. It's Weekly Stock Char, right?
Yeah, that's it. Weekly stock chart. I tried to put in stock charts, but the TS was too long at the end, so I became weekly stock char, and I just put a picture of a fish on a chart, and yeah, that ended up being my handle. So that's where I'm at. I'm also on stock charts. I have a public chart list there, which I have more indicators there, less strat type stuff. But some of the indicators, longer term indicators that I look at are on stock charts, and they're not anywhere else that I've been able to find. Um, and so I try to update that list about once a week. I do more on Twitter. Not I actually kind of pulled back from Twitter a little bit, but every Saturday morning I'll have inside and outside weeks and rev strats on Twitter. So those are the two places you can find me.
Awesome. Well,
I
thank you so
have some
much.
of these custom indicators that I haven't uh, made public yet. I might at some point make them public, but I have a few indicators on TradingView uh, too, like that the Strat labeling nomenclature, a few other things like that.
Awesome, awesome. Yeah, definitely go check him out. Uh, um, that's where I see you every morning, every Saturday. I've been watching you every Saturday morning. And I'm like, here we go. Let's see what we're looking for. Let's see what we're looking at. Let me,
I
because you're,
appreciate that.
yeah, you do yours. I think it's around 8 or 9 o'clock when I see them, and then in
Yeah,
my
it kind of varies. Sometimes I go out in the morning and go fishing, and then I come back and it's a little later. And sometimes I don't feel like going fishing, and I start early and get a jump on the day. But
that's what
I like
yeah,
doing that because it's good for me too. And but there's that routine. A lot of the trading is there's a routine to it. There's kind of a rhythm to it, and I try to stay in that routine even when like right now I'm expecting this is going to be a slower period in the markets. I'm going to pull back a little bit on my own personal trading and raising cash and all that. Um, but I still do the routine every week, and I see what's moving and what's not, what's inside, what's outside. A lot of the outside bars lately on the weekly have been earnings movers. Sometimes they cut both ways, but yeah, I just like to try to stay in tune with the market that way.
that's awesome. Very good, very good. Thank you so much for being here. Thank you, John. This was great, great interview. And I know that they're going to watch this thing and take a lot of notes and watch it again too, because there's a lot of stuff in here. Um, and you really over delivered, and I appreciate that. Lots of value. Thank you so much. Thank you for being here. Thank you.
Well, thank you so much for having me. I really enjoyed it, and hopefully I provided some value. Even if somebody takes one or two or three things away from this, then it was definitely worth it.
Yep, yep, I agree. Thank you so much. I'll see you later. Thank
All
you.
right, see ya.
See ya. And thank you so much for being here. This was a good one. This is a really good one. Make sure you go back and rewatch all that stuff. And hey, go check out thestratsoldier.com. Thestratsoldier.com. That's where I talk about that's where I show, I got the strat execution course. Learn how to trade those actionable signals, the first universal truth. You can also check out the strat trade checklist. That's where I talk about how to trade the time frame continuity. And I got another course coming out here very soon. You always look out for those webinars and those one-on-ones. And if you don't know anything about trading, check out my ebook, From Zero to Trading. It'll get you started. Thank you so much for being here. This is Strat Soldier with the Weekend Shift. I'll talk to you guys later. Peace.